Hi folks, David Waring here again with InformedTrades.com and today's lesson of the day. In our last lesson we began our discussion of the world's major commodity currencies with a look at the fundamental factors which affect the Canadian dollar. In today's lesson we're going to continue this discussion with a look at the most actively traded commodity currency, the Australian dollar. So let's get started.
Like Canada, Australia's economy is a service-based economy, with over 68% of GDP coming from the service sector. Although agriculture and mining account for only 4.7% of Australian GDP, they account for over 65% of the country's exports. This makes the currency highly sensitive to increases or decreases in the price of commodities, especially gold, as Australia is the world's third largest exporter of gold. While the country and the currency are similar to Canada and the Canadian dollar in many ways, a primary difference is the trade relationships that Australia has developed with Asia, and in particular Japan and China, which represent its two largest export markets. This gives the currency a unique exposure to Asia, which generally does not exist with the other non-Asian currencies we've studied up to this point. As Kathy Lean points out, however, in her book, Day Trading the Currency Market, the Australian economy was able to weather the Asian financial crisis relatively well, so while there is exposure there, it is also important to keep a watch on the country's historically strong domestic consumption in times of global economic slowdowns. The last major factor to keep in mind about the Australian dollar is that Australia has one of the highest interest rates in the developed world, currently at 7.25% as of this lesson. This has made the currency one of the primary beneficiaries of carry trade flows, which we learned about in my three-part series on the carry trade in Module 3 of this course. These flows, combined with the facts that many commodities that Australia exports are at all-time highs, and that the Australian economy has remained relatively strong through the current crisis, has moved the Australian dollar to 25-year highs against the US dollar as of this lesson. As with the other currencies we've studied, in the interest of maximizing our learning, I'm going to defer to FX Word's Australian Economic Indicator page for more information on the important Australian economic indicators. I've included a link to this page below this video on InformedTrades.com, where you can find definitions of each of the major indicators as well as their relative importance to the market. For updates on when these indicators are released, as well as what the market is expecting from them, I recommend checking out the global calendar at dailyfx.com, which you can find at the top of the homepage. That's our lesson for today. In our next lesson, we'll finish up our discussion of the commodity currencies and the main currency pairs with a look at the New Zealand dollar. So I hope to see you in that lesson. As always, if you have any questions or comments, please feel free to leave them in the comment section below. And good luck with your trading.